Yes, hello everyone. I hope you're all doing well and welcome back to this next video on my channel. And in this one, we're going to be pretty much going through mitigations. When it comes to order blocks, it's one of the most key things that you actually need to learn. And it's the way you actually identify which order blocks work and which order blocks are not going to work. Now, I see sometimes, some type of analysis online, when people post it, the way they actually line up their order blocks and everything might actually be, incorrect. And I feel like it's such an easy fix that we can actually go through. And obviously, that's the whole point of this video. Just using this chart, for example, GBP CAD, it's a perfect example of what's been going on in the past 2 weeks. Obviously, I've been, in positions in and out of this. You can kind of see all the annotations we've been going on. I've been going through this quite quite thoroughly with my group in the past 2 weeks. Getting into positions and stuff. Anytime I do send any positions, always, in my entry channel and yeah, just sending it into the group and everything like that. So before we get into anything, I just want to say a massive thank you. On YouTube, we just hit 20K subscribers. As you guys know, I've only been in this game or the YouTube game for about 5 months now, and it's amazing to see all the growth. Even on this video over here, 283,000 views. So it's nice to see all the growth and everything like that. Obviously, if you guys want to get into contact with me, any questions you may have, on Instagram as well, just send a DM, whatever you need. But yeah, so we'll get straight into it. Now, before actually getting into the charts and stuff like that, I just want to go through the kind of basic concept of order blocks, right? Now, when you're trading order blocks, what does it actually mean? Usually what we're taught is this in smart money concepts, is that when an order block is created, it's created as kind of like a manipulation to the upside before the massive downside move. So what is left with this upside move? An order block is created. Eventually, the institutions are going to come back to mitigate their losses because, as you can tell, they've had to buy to sell. And that's one of the key concepts in order blocks. If you're buying to selling, what does that mean? You've got two positions open, right? You've got one buy and you've got one sell. So what the institutions or what we're taught in smart money concepts is going to do, the sells eventually are going to reach their appropriate area. They'll take profits. So wherever it may be, they'll take profits here. And then eventually they want to come back to mitigate their losses. So this sell that's still open, they want to mitigate that loss. So eventually it comes around back to sort of the break-even stage, from the open of this candle. So yeah, that's pretty much the basic concept, right? Now, if we actually apply this into the market, what does it mean? It means that eventually inside the market, you're going to get mitigations all the way around. It's not like there's a time limit with any of this. It doesn't mean that every single order block has to be mitigated straight away, but it eventually will. If it was mitigated with every order block, what the market would look like is something like this. Just downtrending forever and ever and ever and perfectly showing that good order flow. Now, of course, when do we actually ever see that in the market? Very rarely. But if you do see in the market, this is perfect order flow. You want to be getting in and out of them positions, taking profits, because eventually, what does this do? This builds up trend line liquidity at the top over there. So what's built up there? Trend line liquidity at the top. So eventually price is going to come back and take all that liquidity, all them stop losses that are just above the order blocks. So that's the whole theory behind all of this. Now, if any of you guys are into retail trading, this is pretty much the basic concept of order blocks. Now, when it comes to actually using them and entering them, how do we identify the best areas? Now, of course, we've talked about mitigations. There's times, for example, where price may do this. It mitigates. And then for some reason, I've seen analysis like this. It would break down structure, whatever. And then what people would do is they would still use this order block as their new, so they would use this mitigated order block as their potential point of interest up there. Now, it's not actually mitigating this order block again, because that's already been mitigated. But what it's doing now it's doing a second mitigation. So you see this new order block that's created. Of course, you can imagine this order block up here was created up a buy to sell move, right? And to get back here, of course, price has to buy up. So what are we going to get here? We're going to get buy candles over and over and over again up until here. And then what are we left with? Let me just label this quite well, just to help you guys understand. So you can see the up candle I'm representing as blue, the down candle as black or gray. So eventually what price is actually doing, it's not mitigating off this original order block up here, but in actuality, it's mitigating off this one right here. So this is the order block that you actually need to look for. Now, again, this is what I would call, a second mitigation, like a second type of order block, whatever it may be. But, this is good order flow. Now, what happens in the market sometimes, as I've said, is you start to get this. We've created this up candle before the down one. So it goes back down. Perhaps it breaks structure again, comes back up here, and again and again and again. Now, what I want to say to you guys is this. If you have an order block up here and you get that first mitigation, okay, so this would be a good trade. The better trade is waiting for that second mitigation. However, if you're waiting for 3 or 4 or 5 or any more than that, what actually tends to happen is this. You get that build up of a trend line. Now, for many retail traders, they might think, okay, this trend line is solid because it's rejected 1, 2, 3 times before, so therefore it must reject again. Now, how many times do we actually see that in the market? Very, very rarely. What tends to happen is when you have that buildup of liquidity, if eventually we get to, some kind of a nice demand zone, if you're trading supply and demand, this is supply, this would be the demand. If you get to a nice high time frame order block or a nice high time frame demand zone, what you may actually tend to see is a strong push through all of this trendline liquidity. So you see all of that in the market, or this is the whole theory behind it. How can we actually represent that in the market? Now, one question I get from many people is this. I've learned smart money concepts. I've seen your videos, everything like that. And honestly, I get this DM so many times, but I struggle to choose the correct order block. Which one should I choose? Now, we're going to use this chart as an example. So as you can see, guys, what's been going on in the past sort of 2 weeks, GBP CAD. As I've said, we've been following it quite closely in my group. Just to sort of go through that, I'm always doing my weekly analysis. For example, this for the week ahead, some of the charts that I'm looking at. When we get to the daily analysis, I'm always posting, which zones I'm specifically looking at. And then for entries, this is the type of stuff I do. So GBP CAD, for example, had an entry there. As you can see, we were watching this higher time frame order block. And exactly what happened, now we're starting to break structure downwards, and exactly like that. For any of you guys that are wondering, of course, I do have the course that's complimentary with the Discord group and everything, all links in the description. But there's the full technical course, about 4 hours, fundamental course as well. It's about 4 to 5 hours. And yes, pretty much going through everything. With myself personally, I'm always having that fundamental bias. So I'm understanding where the market's actually going to go. So for example, right now and the week previously, I was seeing GBP to actually start to sell off because of its fundamental weakness, the Canadian dollar to actually get stronger, especially this week, where we're looking to hike interest rates for the Canadian dollar, Bank of Canada. So it's looking quite positive for that. There's a few other factors and data points that we have to look at, but yeah, this is the type of detail that I get into, even with the fundamental breakdowns. And yeah, it's something that not many people actually consider really, using both fundamentals and technical information together. But yeah, guys, all links in the description down in the video. But yeah, let's just get back into it. So when I was looking at this chart previously, let me just go back to my weekly analysis last week. GBP CAD, where was it? In the daily analysis, I believe. Oh yeah, guys, I'm always doing case studies like this as well. So really in depth, explaining why I took a certain trade, why that analysis maybe worked, why it didn't work as well. This is all the amount of detail that you kind of need to be getting into. It's very key when you're actually learning. So yeah, any requests, I always send it into the group. But anyways, I mean, this was the analysis that we were looking for. This was the high time frame point of interest. And why was that? Look at this order block. I want to go into detail into it because as that saying goes, the devil's in the details. But yeah, look, what's happened? We've had this buildup of liquidity right here, and as an order block should usually work, it manipulates liquidity to the upside. So you see this buy candle. Look at this buy candle to become the sell candle, and this aggressive move up and then back down is exactly what an order block should be. Again, something like this as well. You've had that aggressive move to the upside and then start to sell off. You see, of course, you need your confirmations in these types of areas. And as soon as you get them confirmations, I've got a whole list that I send to my students that I always go by. With your strategy, you need to keep a solid list and always abide by that. Always stick to it. But you see this order block right here, it's a perfect one. What happened? Price mitigated straight off it. Look at it. It went straight into the wick, perhaps even into even into the body. Now, of course, depending on how big the candle is, sometimes I go for the body, sometimes I go for the wick. In this case, it mitigated both. And as you can see, started to pull back downwards, down, 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 showing nice order flow to the downside. Broke structure to the downside as well. And at the time as well, we were still looking for pound sells fundamentally. So I knew, okay, in the near future, we're still going to be looking for GBP CAD sells. This case study over here, what was it? A 1-to-9 trade, sent into the students as well. Even on the Telegram as well, my Telegram is the free group that I've got. I always send in case studies and all that sort of stuff in there. But why did I choose this order block? Well, there's a few things. First of all, it's a second mitigation type of trade. So it's mitigated this one right here. So what we're looking for is we're looking for that second mitigation, which is this point right here. Remember, guys, if you are new to this and you're trying to work out all this vocabulary and mitigations and everything, this was the first one. So original order block up here. This was the first mitigation. This was the second mitigation. And this is more of what we're starting to look for. Again, like I've said, looking at perhaps more than that, 3 or 4 starts to build up that trend line liquidity, and it's not really what we want to see. So, and just as an example of that as well, you start to see this order flow down here to the downside. Eventually, that's going to be taken. Here on this occasion, not quite perfect, but of course, trend lines, in my opinion, are never really perfect. It's very discretionary, very. Okay. So why did I choose that area? Because it's that second mitigation trade, but also a few other details. You see this gap that we've got left right there. This is exactly what would actually help our buyers to understand, okay, this order block might actually be more efficient. It might actually work because it's got this tiny liquidity void in there. I'm going to be releasing a video soon on imbalances and liquidity voids. But for now, just know when there's a gap in the market below an order block, then that's a very key zone in a way. Even looking at something like this, these are the types of gaps. Let me just highlight it for you guys. These are the types of gaps that you want to be looking for. This one had a gap, okay, as you can see. But what did price actually do? Eventually mitigated the actual order block. So this order block can no longer be used in a way. Once it's mitigated, do not use it again as a point of interest. Look at it. Let's just say somebody annotated that as a potential order block. Okay, yes, you may have got one, 2, even 3 hits, but eventually price is going to go through it and take it because this area is no longer valid in a way. Let me just send it back to how it was. So yeah, this area is, first of all, it's that second mitigation type of trade. It's got the liquidity void just underneath, or the imbalance, as many people like to call it. And then what we do want to see is price to start to break down. Now let's go down on the lower time frames. Okay. Now, I want you guys to pay close attention to all of this. So what happened? Price got into this area on the higher time frame. Price actually started to break down all of this structure to the downside. As you can see, this was the last area that price moved upwards. You see, aggressive move upwards. So what price actually did, let's just delete a few things, make it a bit cleaner. What price actually started to do, started to break down perfectly, eventually get into this potential reversal area over here. Exactly what happened, price started to reverse slightly, but because we have our bias that, we're starting to look for sells, what chart did I annotate and what order block did I actually pick up? The order block that had that gap underneath. So this is a lesson I'm going to be bringing out soon in detail. So definitely, guys, be on the watch out for that. But just to show you the chart that I was actually anticipating this as well. GBP CAD, where was it? I believe on the daily analysis. One sec. Oh, you guys, if this is pretty much the free group that I'm kind of looking at. I believe it was actually on my Instagram that I did post it. Yeah, you can kind of see on the 1 hour time frame where I posted it. This order block right here. That's the one that I was looking at, and why? Because of them reasons. And exactly what's happened so far. Prices started to break downwards. So where do we go from here? Already would have been wise to sort of get into a position there. So you could have easily done that again on this mitigation over here of this lower time frame order block. So now what we're looking for is some kind of Monday or Tuesday reversal to send us more to the downside. But yeah, guys, this is pretty much the steps that you do have to follow. Mitigations is so key in smart money concepts, and it's one of the this lesson right here is one of the best things you can probably learn in all the smart money concepts. But yeah, guys, like I say, always be fundamentally aware, have a direction, have a bias, and then only trade in that direction. For GBP CAD, I'll only be looking for sell setups for now, unless things start to change and I start to see a bit more positivity in the pound. We've even got our higher time frame points of interest up here. A few key areas to look at, but for now, price structure is looking very, very good. And yeah, we've even got liquidity to the downside to sort of aim for. But yeah, guys, if you guys have any questions, all links in the description. Of course, this is the course curriculum, about 10 to 11 hours of content, because I've been updating it recently as well. Discord group is always active. I'm always sending analysis. And yeah, I mean, fundamentals is something that not many people are sort of aware of. So yeah, definitely something to watch out for. But anyways, guys, take care, and I'll see you all in the next video.